Hi friends, welcome back to my channel. My name is Deltavier, and in today's video I'm doing something a little bit different. I want to talk about the basics of sinking funds and how to get started. This video was requested by one of my subscribers, and I wanted to be a little bit creative in how I approached it. Okay, so what are sinking funds? Sinking funds are basically a sum of money that you set aside that is completely separate from your emergency fund or your savings account. Sinking funds are funds that are designed for a specific bill that is coming up or a specific expense that is coming up. And the benefits of sinking funds is that they provide financial peace by allowing you to prepare ahead of time for these expected expenses. Some common sinking funds include things like annual credit card fees or subscriptions, family vacations, including hotel or airfare, car tags, car maintenance, car registration, car insurance. Even saving up for a new car is a sinking fund for some people. If you have fur babies like me, a sinking fund would be something for covering your vet fees or grooming fees, even boarding fees or emergency expenses related to your pet. And all of us can relate to electronics and how costly they can be if they break or if they just need to be replaced altogether. So a sinking fund could be specifically designed to cover the cost of repairing a laptop or getting a new charger. I know I recently had to pay $84 for a new charger, and a sinking fund helped me do that. Other common sinking funds include medical sinking funds to cover your co-pays, deductibles, even paying for vitamins and supplements. Also holidays or special occasions, including birthdays, clothing and shoes, as well as my personal favorite, treat yourself sinking fund for occasional splurges when the spirit moves me. Common ways to save. Online savings accounts such as Ally, Capital One 360, even the Capital app. I recommend doing your research to find out which one is best for you. Look at the interest rates and keep in mind that online savings accounts, all savings accounts, have a 6-transaction limit. So if you're going to be doing more transactions than that, you may want to look at another method. Traditional bank. This is pretty self-explanatory. Go into your regular brick and mortar bank, opening up account that is going to be specific to sinking funds. It's going to be separate from your emergency savings or your other savings that you may have. And finally, at home/envelope method. This method entails taking out cash for your sinking funds and stuffing those funds in an envelope of some sort, maybe in a secure binder, and putting it in a safe and secure place like a safe that is waterproof and fireproof. There are lots of videos on YouTube on this method. So how do you get started? The first thing you need to do is review your current budget. You need to look at your income for the month as well as your bills and expenses to ascertain or to determine if you have any extra funds that you can use to save for these future expenses that will be your sinking funds. That can be $1, that can be $5. It adds up. The next thing you want to do is look at your payday calendar. You want to specifically count the number of paydays you have between the time you're going to start and when those funds will be used or needed. And then from there, it's basically simple math, meaning you need to look at the amount that you need, the number of paydays that you have, and do some division. So let's say you want to save $500 for Christmas, and let's say you have 10 paydays left between now and Christmas. You want to do $500 divided by 10 paydays. That means that you need to save $50 every paycheck to meet your goal for Christmas. And most importantly, I recommend that you ease into this process of starting sinking funds. So don't start with 20 sinking funds or 10 sinking funds. It's best to start with one or two. Maybe pick the most important ones to you. Maybe pick ones that have set due dates and set amounts to make it easier for you to assess if they're working. And you want to track your transactions. And this can be done in paper, in a journal, or in Microsoft Excel or Google Spreadsheet. And you want to basically track what is going in and what is coming out each fund. I recommend doing this at least on a monthly basis, just so you can be aware of what is in each fund. And then the most important thing I think you need to do is to assess. You need to ask yourself, how is this working for you? Do you need to modify or make any changes? Are you on track to save? Is your life easier? Are you financially at peace or satisfied with this process? Hopefully, the answer is yes. And that is it. Congratulations, my friends. You did it. Your future self thanks you. And I thank you too. Thank you so much for watching. And please remember to subscribe to my channel, like this video, and hit the notification bell so you don't miss another upload from me. And also leave a comment down below if you found this video helpful. Don't forget to share it with someone who may need this information. And I'll see you in the next one. Remember, just keep swimming.